I'm dying to know what takeaways you had. I know in general you're anxious to get this out of the political sphere and move it into the hands of regulators, where hopefully there'll be a judicious take. What did you learn yesterday?
Well, when you look at, I listened to the hearings yesterday. So much of it was rhetoric and sort of, I'll call it conspiracy theories that people were espousing or talking about. And we seem to have lost the root cause of what's caused the issue here today, which is when Robinhood restricted trading on certain stocks. And at the root of that, you have to go back to the settlement system and the two-day credit. The 2 days of credit that causes that risk, which causes the increased collateral. And then meanwhile, we've gone off onto tangents around payment for order flow, shorting, and conflicts of interest, which are all things that have been around for decades, are heavily regulated, and we seem to have drifted back there as opposed to getting to the root cause and the fact-based analysis of what actually happened.
So if we zero in on, say, the settlement period, are you optimistic for changes on that front, and do you feel like the infrastructure is there to handle it?
Well, keep in mind that 4 years ago, we went from T+3 to T+2. At the time when I was still at Ameritrade, we would have preferred to go to T+1, but the industry agreed to go to T+2 instead. I think all these things, why I want to get it out of the political sphere and into the regulatory sphere, is you get people that really understand how these markets work and have the ability to implement new regulations that actually can move this forward. If we move to T+1 or even T+0, that will take time because you have to get every player in the industry to move along with it. But I do think with technology today, it's the right move.
Speaking of technology, Fred, of course, the ability to conduct a trade now immediately on your phone, the so-called gamification, in a sense, of trading. What are your thoughts about that? Is it here with us to stay, and what risks does it present?
Well, I do think it's here to stay. I think for as long as I've been involved with this industry, we've always tried to level the playing field between retail and institutional and make it easier for people to trade whenever they want, however they want. And so, the gamification is another sort of part of that evolution, as is social media, which is, giving people information and ideas about what to trade and what to invest in. So they're definitely here to stay. It probably should be a review of gamification and social media in terms of, what, if anything, regulators should do in that sphere. But the reality is, it is here to stay, and we're going to have to get used to it.
Fred, I think one of the key concerns about the potential gamification and, addiction, which was another topic that lawmakers brought up yesterday, is this idea that it's so easy now to trade options. Easy meaning no friction with commission-free options trading. Easy not meaning that it's possible to have significant losses there. How do you kind of distinguish the ease in which retail investors can trade stocks and other types of kind of more traditional securities with those of derivatives?
No, well, it is easy to trade a stock. To trade a derivative is not as easy as everyone's making it out. I won't speak for Robinhood because I don't know what they do, but I know when I was at TD Ameritrade, you had to qualify to trade options, and then there was different levels of types of option trades you could do, but you had to demonstrate that you knew what you were doing and you had some education and training to move up that ladder. So there was friction, at least from my perspective, at least at TD Ameritrade, in terms of option trading, particularly when you have a trade where there's unlimited downside. You really got to be careful with that and restrict people to make sure they know what they're doing before they place those types of trades.
Shepard Smith here. Thanks for watching CNBC on YouTube.